The trend is your friend. That's what I'm going to talk about today. Very, very important concept. What is the trend exactly? Well, you may not know what a price bar is on a price bar chart. For instance, what we have is we have these charts where you have the open, high, low, and close. There's also candlestick charts, but they're completely worthless. I haven't found a way to get those things to make money in any possible way, shape, or form. So my advice to you is to generally ignore just ignore the candlesticks. If I can find a way to make money on them, or if you do know a way to make money on them, of course, let us know in the Facebook group. But candlesticks, So you basically got a daily bar. It's an open, high, low, and close. The daily bar is the most important bar. Why? Because I'm a long-term trader. I'm an infrequent trader. I'm a successful and profitable trader because I trade in the long term. I've never known anybody to make good money day trading the stock market, so I certainly do not recommend it. There's lots of problems that occur when you're trying to day trade the stock market. It is better not to do it. We have lots of studies that show that day traders in the stock market simply don't make money, so stay away from that stuff. So what does make money? Well, trend following. You need to learn to be a trend follower. So what exactly is the trend? We have three basic types of trends. We have an uptrend, we have a downtrend, and we have a sideways or channeling narrow sideways trend, right? Those are the primary different kinds of trends that we have out there that operate on a day-to-day basis, right? So uptrend, downtrend, sideways trend. Those are our trends. And the trend is our friend. The uptrend is our friend, the downtrend is our friend, and the sideways trend is our friend. Most people are bullish because the stock market rises more than it falls on average. And so that makes most people more bullish than bearish, right? And the reality is that you shouldn't be either bullish or bearish. You should be flexible. You should be ready to get into the market at the right time and ready to get out of the market at the right time. Anybody that tells you that market timing is worthless is somebody who does not know how to invest in the stock market. So ignore those people that make those kinds of comments, right? I hear them a lot. The trend really is your friend. So if you want to be like these market efficiency guys who claim that the stock market, it's trendless. That's what the market efficiency guys say. In fact, Nobel Prizes have been given to people like Markowitz, who showed that the market's generally trendless at that time. So just diversify, right? That it was just impossible to time the market. So you can either believe that it's impossible to time the market and never do it, or you can do what Warren Buffett does and time the market loosely, or you can do what Nicholas Darvis did and time the market intensely. Even Monish Pabrai, who's a big value investor, he also times the market in a certain way. So there's nobody out there that doesn't time the market. That's basically when you time the market, you're trying to buy low and then sell high. So when you buy low, you're trying to get onto an uptrend, right? And you're avoiding the downtrend. So basically you want to be out of the market in cash or whatever. And then when the market drops to a certain point, then you look for certain signals that indicates that it's going to rise. And there are other things. Hey, little guy. There are other things that allow us to see when the market's going to rise. I hate to see stray dogs like that. I'll bet you that was somebody's pet before Hurricane Maria, and that dog has probably been released, in the wild. The people may have died. Over 6,000 people died in Hurricane Maria, and that dog does not have a home. And that looks like used to be somebody else's dog. That dog is way too calm. It doesn't act like a stray dog. It's just not skitterish. Hurricane Maria was unbelievably devastating for everybody on the island of Puerto Rico. The place was trashed before, and now it's basically like Cambodia in the 60s. Good morning, Puerto Rico! No, go away! Get me out of here! Oh my God, Puerto Rico is trashed! Yes, it is. That's indeed true. But people here who are completely hosed financially, learn how to invest in the stock market, and they can pull themselves up by their bootstraps. Indeed, that is true. So who are some major trend followers out there? Well, Jesse Livermore was a major trend follower. There's an important book called Reminiscences of a Stock Operator. And Jesse was pretty much the master of the trend follower. In fact, at one point in time, I thought W.D. Gann was this big brainiac out there. And I eventually figured out, because during Hurricane Maria, I read the most horrible stuff in finance that I never, ever wanted to read before. And W.D. Gann stuff was one of them. One of the things that I figured out reading W.D. Gann stuff was that he was a fraud. He was a con artist. And the reason is because all of his stuff is just too perfect. When you read, for instance, Jesse Livermore, he's never perfect entry, perfect exit. He always had some slop. He had some slops that wiped him out, bankrupted him a couple of times, which is exactly why I use something called a core and satellite strategy, which is beyond the scope of this conversation right now, because right now we're talking about why the trend is your friend. That's right. So Jesse got wiped out a couple of times. W.D. Gann was just a fraudster. You know, it doesn't look like he had that much money, and his son really ratted him out. His son got really mad at him for not being a cool dude. And what happened was that good old W.D. Gann, actually had a pretty nice life, but he was a con artist. He didn't really make any money trading the market. So when you go back and you're reading people's stuff, you want to be really careful to make sure that they are the real McCoy. People that are the real McCoy alive today include Warren Buffett. Monish Pabrai strikes me as a person who is very likely the real McCoy. We've got other guys out there like George Soros, has done really well. And of course, I've done well too by following the trend. So how do I follow the trend? I follow the trend three different ways. I follow the trend either with an indexed mutual fund or ETF, generally ETFs. I only buy index mutual funds in an employee-sponsored 401k or 1165E plan if it's the only thing I've got. Otherwise, I've found that I'm far better off trading an ETF rather than an index mutual fund. And then the other thing I do is, for trading uptrends, I'll either trade the single stock or I'll trade the call options. And then the fourth thing is cash. And cash is when the market's really bad, like it goes into some sort of megatronic drop. And then in that case, I'll sell off everything. I might sell off even the index mutual funds, right? And get in and the ETFs and get the heck out of them. Yeah, when the market gets too bad. So the trend is something that I'm keying on first and foremost. The trend is by far the most important factor that I'm looking at when I'm investing in a stock. It trumps anything else. If the stock is not uptrending, I am not buying it. All right, that's just the way it is. I don't care how rosy or interesting the company sounds. I don't care how great the management sounds. I don't care how innovative and exciting the product sounds. I just don't care. And the reason is because I've bought so many stocks in the past that, everybody was talking about how great they were, how rosy the economics were of the business and the products and stuff like that, only to have the stock collapse. That's why timing is so important. You can have a really great stock. Take Facebook, for instance. Talk about a great company, really, really profitable. But what's happened is that the politicians don't get power from it. The politicians get power from Twitter. And so because of that, the politicians literally hate Facebook. And so they've been tearing it apart and trashing it and so forth. And for that reason, even though the company's been incredibly profitable, the stock is tanked because, the politicians find it, billions of dollars. No, that was the politicians that find it. That wasn't some agency because they did something wrong. That was the politicians. The politicians are the ones that belong in jail, folks, not Facebook. In fact, it was Trump messing around with the politics that ended up creating the whole Cambridge Analytics thing in the first place, right? Because Trump, above anybody, wants Facebook trashed. He wants it gone. So that's like a really good example of why you never trust the story behind the stock. So the story is like the fundamentals. I like to call the fundamentals funny mental analysis because it's funny mental analysis. It's totally useless and virtually retarded, but people pay a lot of attention to it. And since they pay a lot of attention to it, And they end up like lemmings, and they all end up walking by themselves over a cliff, just like the lemmings. And that's exactly why you don't want to be following fundamentals. It is important to know whether a company is profitable and so forth, but loosely, more or less, it's a lot more important to know whether the company has a good franchise and whether that franchise looks like it can sustain high profits. So, if you've got a company that's been cranking profits for a long time and then suddenly it has a large, rise where it starts to uptrend, that's exactly the kind of stock you want to buy. That's not the only signal that I look for in buying a hot rising stock. There are certainly other factors that I look for, one other in particular that I'm not going to talk about right now. But if you know what that other factor is, then you can dramatically improve your accuracy in terms of figuring out when a market is turning. And when we talk about turning points or a market that's turning, we're talking about a stock that's turning from a downtrend to an uptrend, or a stock that's turning from an uptrend to a downtrend, or a stock that's turning from an uptrend and then channeling sideways, or downtrending and channeling sideways. Those are the main scenarios. So the four scenarios, the only four scenarios that we can really trade, right? And then obviously if the trend keeps collapsing, if it goes up and then comes down and goes up and comes down, then that's basically channeling behavior, and it's not so easy to spot it all the time. Let me tell you that. It can be very difficult. So that's my discussion for you today, talking about why the trend is your friend, and it really is. I think I've covered a lot of really important information that I think will really, 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 really help you in your stock investing if you will just remember that the trend is your friend and use some common sense when you're staring at it, okay? Over and out. Today I'm going to talk about Drive Shack, symbol DS, Yum Brands Inc., YUM, and then Target Corporation. Why am I talking about Drive Shack? Because a lot of people are buying calls because of this blast in volume here and then this initial rise. Problem is this stock is still downtrending. It looks like a dog. And so you got to ask yourself, what the heck is a Drive Shack? I mean, I really couldn't imagine. I had no clue, right? If we look at the weekly chart, you can see that it's been really sideways. It hasn't been performing very well at all, and it's a stock that's trading in the fours. You can see that it's traded way under $1 all the way back in 2009. It's been around for quite a while, but it certainly has not been a top performer. And it didn't really perform very well in that 2012-2013 volume that came flying into it either. So this is absolutely a stock that I'm not interested in. Why am I bringing it to your attention? Because stocks that I'm not interested in can be very useful for you to understand what I avoid. Now, it doesn't mean that if the price starts to shoot upward off of that volume that I might become interested in it, but I'm just not sure that I agree with the model on this business. And if you look at the website here, join the club, yeah, I could take that driver and smash out all the windows or something. I'm just not a big fan of golf, right? I never really did kind of get it. My brother is almost a scratch golfer. I think it's actually a very cool game, but I'm such a clod with it. The only thing I know how to do is smash it up and destroy it like the Hulk. Yeah, smash, baby, smash. But my nephew is a really solid golfer, and we are hoping that he can become successful enough to get a D1 scholarship into a good golf school. So we'll see how that goes. And anyway, this is the Drive Shack, and I guess they have, TVs and parties and booze and stuff, but you can see the stock sucks. It looks like a dog. Some, interest in volume, some call option coming in, but I'm not sure that it's sustainable. And I don't know if I'll even keep it on the watch list, but because I'm just not excited about the business model. I just don't really see how this could be cranking out a ton of profit. It's kind of like bowling alleys. Would I see a huge amount of profit in bowling alleys? Because this isn't very different than the bowling alley concept. And my question is where's the money? Where's the money? I don't think that that's a place to go for young people to find hot girls, but hey, maybe I'm wrong. All right, moving on. So the next stock that I'm going to discuss is Yum Brands, and this is a stock that we've seen before, and they own Pizza Hut and McDonald's and stuff. A lot of volume has come in recently in this area, and it's pushing up from here. And then we see this pushing up off of the face of that pretty steep downtrend. So I don't know, is it sustainable? I don't think I'm holding any more yum. If I'm completely out of yum because of the weakness. So it really takes some pretty amazing strength for me to want to pony up to that nasty trough again. And what about Target Corporation? Target's a company that's been doing really well, and then it had this huge jump, and then it kind of phased off. So I've got a test purchase of Target calls. $10,440 had kind of wilted off to $7,700 when it was at that low point. So it's probably at that or above that, because remember, as time goes on, there is some decay that's hitting these options. So Target is picked up a little bit, and we'll see if it continues to rise and can break up into new levels. And that's what I've got for you today. Take care. Over and out.